Hello, welcome to my second analyzing session. This has been a crazy few weeks, but this this session is hosted both on Tuesdays and Thursday as uh, as I can fit into my schedule. So every Tuesday and Thursday night, come join us, and we will hopefully analyze the stock market and some of the charts. What I'm gonna hop in right now. We're gonna hop into um, the heat map of what has happened in the market today. So hopefully this isn't a surprise for most of you because we've been going on a downtrend since the beginning of the year. I believe the only truly green day that we've seen so far was probably like the in the within the first week of the new year of 2022. So you can see today a lot of repeat from before, right? Tech is suffering. We have our communication services, they're suffering. Consumer discretionary, healthcare is suffering too. But energy is green, right? Energy is green, and a few of the banking that is green, right? So this gives us a quick overview of what is happening in the stock market, right? So a lot of reds, um, and it's believed that this is overdue. Could be reasoning of the rates rising, interest rates rising, inflation. Overall, a lot of the PE ratios were way too high. So, if for those who do not know, PE is uh, the basically the price per share divided by the earnings of a company. So a lot of the PE ratios for a lot of our techs have been way high, and that's also another reason why things are falling. Right? It's not that the companies themselves are bad because we have things that are beating earnings reports that basically have had earnings reports so far, but PE ratios are bad. We're seeing a lot of headwinds, right? Inflation, interest rates rising, all of that, and um, and the government pulling out of the stock market, right? They kept that going for 2020, and so there's a number of things. But will we truly know the true reason for why the market is going down? For me, I feel like knowing that reason alone it doesn't really help you too much in the market, right? We may never really know the true answer. All we can do is see the price action and play it out. That's all we can really do. So let's dive right in and look at the chart of SPY. You can see the last 2 3 weeks have not been kind to SPY at all, right? So we look right here. I'm trying to get my pen to draw. So you can see this right here, this move, violent move to the downside, right? This yellow line right here is a 200, and you can see we're right at this, we're below the 200 actually, right? Now, for me, this is where, this could be completely different for you guys. For me, this 200 is where I like to start adding to my investment position. Companies that I truly believe in that are going to be doing well, right? And right now it's not just SPY that's at or below its 200. There's a number of stocks, number of them that we're going to look through today too. But SPY is one of them, right? So SPY is sitting below its 200. But think of the 200. Yes, it shows up on the chart as a line, but think of it as a zone, right? And this zone, we do not know how big it could be, right? It could be from here to here, right? We see a little bleed a little through, and maybe it'll bounce back. But this is it's a good sign without for the moment we're probably stopping. But at the moment, I think this is what is going to happen, right? So we sort of predicted this move at the beginning by saying, but I think we could be in for. Now the question is, we're going to bounce inside this range right here. So basically between 440 and 430 for a while, right? For the next few weeks, or are we going to go between 430 and 450, right? 430 and 450. So it's inside this little tight range or inside of this right here, right? So that's the question now that I have. If we dive down to the hourly, we can see the hourly is not really showing us anything. We had a crazy candle today. So this crazy candle, it doesn't really do us justice because it skews our charts. I'm pretty sure most of us has seen this, so we can correct this. If you don't know, you can correct this by right clicking on this candle and clicking correct candle, and you correct it, right? So in here, you put a price. We'll put, I think the low was like a 480. Oh, so we, you know, because most of the things were the same. The only thing that really changed was the the only thing that really changed was this low. This low was way too low. I think it was like 428 or something. So we'll just put something that would look a little bit better, but it doesn't really matter too much. We just wanted to so that we can see what, right? So it looks better. So you see this? Okay, so that fixes the candle. Or you can opt to just remove the candle so that your chart isn't so tight up in here. But we see my general rule is if the 50 is under the 200, it's a shorting. You're looking for shorts, right? And at the moment, it does look like it might be looking to break this because so far we've seen in the last we've seen in the last week or so that we've seen in the last week, 2 weeks, that it just went straight down, right? And it sort of just hit this wall right here. This wall right below, right at 430. It did go below here, but it came right back up and it's holding. It was holding 430 all day today. So 430, this level right here, it could be a sign that hey, it could go back up for a little bit. But we need to really see on the charts, right? First. So at the moment, I wouldn't be necessarily opening any shorts because um, any short positions, just because what is it, IV on the puts are way too high, meaning you're going to be overpaying for puts. The premium is way too high, and if you don't get any move, if you get a day like today where this is what happened, right? Pretty much a flat across the board. You're gonna get killed if you don't see something so active like the last few days. You're gonna get killed. Or if you do get in, you want to be in really quick in and out, right? Catch a $2 swing up, $2 swings down, but with a lot of with all the premium that you have to pay for it, it might not be worth the risk. So that's why you don't want to open any short positions yet. You want to be careful, right? So one thing to also be careful of tomorrow, Wednesday at 2 p.m. is 2 p.m. is the FOMC or FOCM or MC or whatever. That meeting is tomorrow at 2 p.m. Eastern. So pay attention to that because we're going to see a lot of volatility, meaning a lot of crazy swings up, swing down. We don't know the direction yet. We're going to see a lot of that tomorrow, right? So the importance of that meeting is it's going to determine what we're going to do for the next few months as economy, right? So the feds are going to be talking about that, if it's going to be an interest rate increase or if it's going to stay the same, or what the heck they're going to be planning to do. So be very careful tomorrow around 2 p.m. or especially 2 p.m. especially with your trades, and also the sideways action today, because right now we don't look like we're going to break down even more to the downside, and we don't look like we're going to go up. So right in the middle, and maybe they're waiting for that meeting tomorrow to decide. So be careful of that. Right now, the same story is with Apple. The reason why we look at Apple is one of the biggest component in SPY. Uh, a little bit above 6% of the mark S&P is SPY. So we have to be we have to keep Apple in mind. But Apple seems like it's bouncing, right? It's not yet under its 200, and Apple is still a very strong company. So even times like this, I will be looking to add, right? Even though it's not at its 200, we might not see it at its 200, right? This blue line is its 100 moving average. Even though I don't pay too much attention to it, the candles that are surrounding it is telling me that the selling pressure right now is at a pause. Now, I don't know for sure if it's over, but I do know that it is a pause. So you can see here times that it has paused too, right? Selling pressure has paused. If you look at the last 5 years, right? So areas like this was good areas to get in, right? Here, 2020, it actually broke through to 200. So this 200 is that's why it's a strong area of support that I look at, and you can see here it dove down, right? So that's just a few example, and this is just a repeat of basically everything that I've been telling you guys that I pay attention to. So that's Apple. Right? Apple's still holding in there tight. It's a great company. So for those who don't have a position or are thinking about adding to a position, right, especially uh, in the midst of this current market, I know it's very hard to, but these are the deals that you guys are looking for, right? And even though we don't know where bottom is, my recommendation is if you are getting into a long position, don't get into your full size. Meaning, if you're planning to get 100 shares total, right, add on to your portfolio, don't get all 100 shares at once. Maybe break it down into fours, right? So get 25 shares, and then 2 months from now, get another 25 shares, and just keep doing that until you have your full position. Because we don't know how long this downfall is going to be, right? And we don't want to just randomly jump into the market. And that's something that's for sure. We don't know how long this can last because this could just go straight down. That's one thing that could happen, and just continue going down. That's one possibility. This could be the bottom, and but it could just stay here, right? And what we've been used to is seeing it go down to a bottom and then bouncing right off. So those are the three possibilities that could happen in the market, right? So we have to really pay, really, do our risk analysis and everything before we get in. So if you are thinking about getting into a long position and you have 100 shares, maybe break it down, right? So in this place, right, you get your first position here, right? Maybe a few weeks down the line or a few months down the line, you get your next position here, 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 right? So you break into four. So these are targeted times when you add on, but it could be different for you. So that's my recommendation, right? To stay safe and also to still put your money to work, right? If you're in the market long term, that's what I will recommend you do. If you're short term, you're not going to be looking at the daily. You're going to be looking down at the hourly, right? The hourly. Say with SPY, you can see there's some struggling today. Today was bounced, basically came down to this wall down at 156 here, right? 156. Right? 156. And once it came down to 156, it was just staying in here, right? So there isn't a clear direction today, right? We could be going up, we could be going down, working whenever, wherever. But tomorrow, we're probably gonna know where it's gonna go. If it's gonna continue going down further, or if it's gonna bounce from there. But position yourself, right, and stay safe. Okay. Daily. Let's look at Nvidia. Nvidia is pretty crazy, right? It's right of the companies that are at it's 200, right? Nvidia is one of them. Nvidia had a great run, right? Run of a few months, and so this 200 is where I will be, for me at least, I will be taking my first couple stabs at it. Right? First stab, I'll probably use this candle here. That's my swing low, right? So this is the swing low at around 208. Probably even say 205, right? Position myself and say that 205, right? 205 here is where I'm setting a stop at. And since today it didn't go down any further, to see if tomorrow will or won't. And right, so these are the possibilities that it's going to literally bounce up or it's just going to stay flat. And in which case, this the downfall, if it breaks below 205, out. So that's another. Those are my plays on Nvidia. Diving down to the hourly, you see, same thing. The last 2 days, right? The last week or so, we kept going down, right? And we hit a wall here, right? And so in this area, we were bouncing today. So tomorrow we're probably waiting. We're going to be waiting for the meeting also, right? Common stock, right? Now, one thing that we need to pay attention to is also that these stocks are going into earnings. Their earnings are coming up. Now, last week, Netflix went into earnings and it beat earnings, but it came down, uh, basically came down huge in price. And that's largely due to the guidance, right? Had good earnings, but the future guidance is pretty poor, right? Pretty slow. So that's why it came crashing down. But so we're looking to see what Nvidia will do when its earnings comes. And its earnings, Nvidia's earning report is on uh it is on February 16th, right? So mark that on your calendar as it approaches earnings. You might want to be careful, right? 216 is its earnings. This day right here. Right. So pay attention to that. Earnings is one of the events that you have to be careful of. Today's today's company earning or stock that went into earnings was Microsoft, and it did a funny thing, right? So other stock that's at 200 had a great run too, right? Mega Tech, right? The hourly, it did this thing right before earnings. It dumped, but then after after that came out and after the post earning meeting, it shot up again. Now we had in our Discord group, we had a discussion about it, and we basically said, because also because Microsoft is close to 6% of 6 or 5% of the market, that if it has really good earnings, which it had great earnings, beat all expectations and everything. If it had good earnings and still went down, that basically smells doom for the market. So it is a good thing that we are sort of flat, right? We didn't really die with the market, right? We didn't really die. We sort of just remain kind of flat, right? And I'm curious to see what happens pre-market tomorrow morning, if this thing continues to go up or not, because both Microsoft and Apple account for 12, basically account for 12% of the the market, right, of S&P. So that's what we need to uh, look at, right? So that's Microsoft. AMD Another one of my favorites. We look at the daily, and surprise, surprise, it's another stock at its 200 moving average. You know, for any long term person, the 200, anything at its 200 is, you know, golden. Especially a mega tech that has staying power. It is a golden play. You usually wait for that, or you wait for the 50, and that's where you're looking to add to your position and going from there. So for me at least, AMD is a stock that I will be looking to add. I already have a position, but if I do want to add more to it, I this is where I'm starting to load up. Right? Not saying that it's not going to go down further. You know, it very well could, and uh, it could it can go even further. Right? It can go all the way down to like the 60, 70 levels. Not completely unheard of. But right now, when it's at its 200, around 15 and below, it's a great app for me. And hopefully, you consider it a good place for you too. So, not too much to talk about this week, and a lot of the small caps, you know, like stuff you see are stuff like SoFi. They hang in there, but they're dying off. When the market does really poorly, small cap companies are usually the first ones to get hit. People take out money out of these stock before they take it out of mega tags, you know, are uh, better quality stocks out there, right? So they take it out of this. But we just if you are a long term investor with like 5-10 year minds vision out there for SoFi or other small tech companies, hang in there. It's gonna get a lot worse before it gets better. So at the moment, if you do have some spare weight change, maybe throw in, average down. That's all. That's the best advice I can give you. Okay. So overall, the market is still looking pretty bad, but it's just the end of our fall, right? We don't know for sure. Right? We can go from this drop and maybe even go another 10%, because right now we're sitting close to 12% drop from the top. A correction is anywhere between 10 to 20%, so we can probably go another 10% down, right, from here, take us under 400. But you know if you are a long-term trader, hang in there, stick to your game plan. Remember, you're not trading for these short-term swings. If anything, add on to your positions as you can. That's how you grow your portfolio, right? At a time like this, when it sucks to add, continue adding, because that's, when it does reverse, the positions that you are adding now, with however much you set aside each month, or each 6 months or whatever, uh, they're going to be able to buy more shares, and those shares, in turn, give you more return in the future. So if you're a long-term investor, remember, these short-term swings happen, but in the long term of the market, right, number of years, it's always a positive return. Let's keep that in mind. If you're a short-term trader, stay safe. Remember to trade with a stop, right? Just because it's so one-sided, it's not the time to trade with bad habits, right? It's not time to develop bad habits. Don't forget your stops. Even though it seems like it is limiting your gains, you are in the market to place good trades first. Second, if it comes with gains and stuff, that's good. But remember, place good trades, then worry about the gains. So do that. So don't do anything that is gonna promote bad habits, because markets like this don't last forever, right? They're not one directions forever. And when it do goes back to normal, you're gonna have a whole bunch of bad habits that you need to break. So do good habits, even though it seems like it is uh, against your uh, your maximum gain. All right, so that's pretty much it for me. I'm gonna try and keep these sessions really short. I know nobody really likes to sit for an hour because an hour is a long commitment, but it's nice and short. There's not too much to talk about. There's just events in the horizons that you need to look out for, and also in this bear market or this downtrending market for the time being, just stay safe, right? Have a positive mindset, positive emotion. Don't get so emotional at the market, and have fun with it. Stay safe. All right. With that, I'm gonna close it out. Remember, if you are not subscribed yet to my YouTube channel, please subscribe. I will try to do a better job every time, trying to do this, bring this to everybody, so we are aware of what's happening in the market and how to play or position ourselves for better gains. Right. And also, one more thing. If you haven't joined our Discord, for sure join our Discord channel. The link is in the description. This is our Discord channel, Zero Day Yellow. I know it's a bad name, but come join us. We're there every single day. We have active channels, news channels, stock watch list, a bunch of bots with commands and everything. Voice channel every single day from market open to market close, and a ton of more experienced trader than me, and a wide variety of traders. We have short-term traders, day traders, long-term investors like I am, and the sort. So come join us in there. If I can't answer your question, maybe one guy in there can. Join our YouTube channel. Uh, well, subscribe to my YouTube channel and join our Discord server. Have a great night. Stay safe. Thank you, everybody.